Hey everybody, good morning. Morning, Infinity, Philip, Wade, Everett, Nikki, John, Craig, Donald, JB, Anthony, Maurizio, John, Jan, Valerie, Rex. Good morning, everybody. Larry, Kevin. Kevin, you made it live. Randy, Eric, Mary, Dan. Glad to have everybody. If you want to chat with me like all the fine folks say morning, click the link over here. Be a subscriber on the channel. And a few seconds later, you can chat. If you're tuning in when I'm no longer live, though, you're going to have to leave a comment down below or come join me in Discord, which the link is in the description. Just click the More button, join the Market Roadmap. It's like $5. I run Discord for supporters, and become a supporter. It's like $5. And you can get in there, you can chat with everybody. And a lot of people say Discord's like drinking from the fire hose. You get a lot more information than even I cover on the live stream here. Anyway, there is interesting things happening here. Look right here. Surprisingly, single stocks have been net shorted. I have a little black thing showing up on the chart there. Single stocks have been shorted 11 of the past 12 weeks, according to Goldman Sachs Prime. That's interesting. Interesting. And as we roll down the page, looks like it didn't load all the way. Let's try it again. Oh, it's jammed up. Cool. God, love it. Let's pop open a tab on a different browser and see if we can make it pop up here. 1 second. There we go. Clear the old thing. All right. Coming down here. And one of these charts is the open interest right there. Look at this. S&P 500 put open interest has hit the highest level ever. Now, is that put sold or put spot? We don't have that. It's just open. Open contracts of puts hit the highest level ever, while premium is at one of the lowest levels we have seen in years. This is an interesting situation that is developing in the market right now. This, alongside the report I had on Friday with Goldman Sachs suggesting that clients should buy calls on VIX, has created an interesting situation. Hey, Kimberly's here, tuning in from Baltimore. Glad you could get everybody to agree to let you do that, babe. She's up visiting family in Baltimore. So this is me. This may be more concerning than the notice to buy VIX right here. This means the market is this is one of those opportunities. You buy protection when you can, not when you must. If you're buying it when you must, you're probably going to lose money on your protection. If you buy it when you can, this is a lot of times why you see me buy. For those of you that are deeper into my wormhole of services and knowledge and access, when my term, you see me buy these positions that would only make money when the market crashes out. And then you're like, JT, you're just sitting on these, watching them go to zero. It's like, yeah, that's like my insurance payment on my house. I hope to never use it, but I still got to pay it just in case something happens. That's the way I look at these positions. When I buy a chunk into them, I'm not really pushing leverage or anything like that. I may trade a leverage position or something like that, like may buy puts on TQQQ or who knows. But just in case something happens, and this right here is indicating that something's brewing. All right, people are expecting something to happen. Like we're like, look right here. We were at all-time highs and people were not prepared, and we went down in a blaze of glory. Now we're at all-time highs, and the open interest is at all-time highs. This is curious right here, but premium is at the lows. So this is an interesting kind of situation that's set up here, and this is a cautionary chart as far as I'm concerned, because what happens if we pull back? What happens indeed? All right, moving on. Moving on. All trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation here, intended to be informational, educational, fun, and entertaining, is not a recommendation to buy or sell any financial instruments or anything from me or any other guru at all. All right. If you desire personal financial advice, you need to hire and consult a financial advisor. That's not what I do. I'm not advising you to do anything except be freaking careful. All right. You can and will lose money in the market. Think about it. Every trade, somebody's winning, somebody's losing. There's a buyer, there's a seller. Stock stock or any instrument, stocks, options, bonds, cryptos, futures, forex, treasuries. They're all like, everything's going to go up or down, buyer or seller. And there's a winner and loser in every trade, one way or another. Let's try to help make that not you. That's what we're trying to do. I'm just sharing what I'm doing because I get lucky a lot. So now, big event this week. Dun, 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 dun. We've got, this is interesting. My calendar went all wonky on me. Go back. There we go. Default thing. So nothing really today. Tomorrow, the FOMC meeting starts. And Wednesday, at 2 p.m., we get that FOMC statement. And then 2:30, Jerome Powell, ever since he's been the Fed president, cannot resist doing a press conference after the statement. When Yellen was in, she only did every other one. Jerome Powell does every single one. He loves to talk, loves the crowd. We'll see what happens. Could this be the top? It definitely could. We are at the time limit. We have exhausted the time limit. Right now, we are at the same amount of time that we had on this rally last year from March through July. The current rally is exactly the same length now. This rally from here, from March 2023, where we topped out at the end of July 2023, that lasted like 100 and whatever days, 140 days, 96 trading days. At this point, this low we made October 27th up till now, today makes the 96th trading day and 143 calendar days. We are now at the same time. How long can the market run? If that's an echo time-wise, duration run, how big of a pullback could we see? Be careful. We did almost the same kind of move, a little bit accelerated rate on the going up side. No 2% pullbacks. Highly unusual to go this length of period without getting any kind of pullback. These little blips for a day or two don't even hardly count. We're in this tight little channel rising very quickly. If we break below it, roadmap line or worse could be the downside target. I just want to throw that out there. We have gotten a very interesting situation here. So yeah, the puts typically run higher than the calls. So we're seeing a lot of people playing upside calls, way more than normal. So we're in a very unusual situation right now. And Nvidia reporting they're buying a company and doing a deal and making the top mover list today. It's we've got an interesting situation cooking in the market for sure. Now, as we pop over and look at the normal stuff we look at, now that we've talked about all the warnings and cautionary tales, S5FI, golly, loading slow today. Dun, 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 dun. Play some Jeopardy music. There we go. Stocks above the 50-day moving average. Rolled on back down after tapping that 80 for 3 days. That may have been the top. be very, like, this is the warning light. We did a lower high. That that could be kind of almost like a market premonition, if you will, that things are about to go south, and TradingView is being ridiculously slow at the moment. See what we did over here? This big roll into March, February, and then March. This was off the lows in 22 when everybody thought the market's just going to keep going down. We're going to burn it down. We're going, epic pessimism. We rallied up, busted above the 80 on the S505. The stock's above the 50-day moving average. Came up, tapped again. Kind of got a lower high, a lower high, a lower high, a lower high, and then plummeted to the bottom in March. Everybody was convinced we were going back down again. Now, similar situation, not quite like this was the lower high. This was slightly higher than this one, but still lower than this one. And it looks like we may, every time we bust out the top, we usually go test the bottom. We haven't tested the bottom since, we haven't been down there since November. But we're showing less strength overall as we go higher and higher on the S&P. Now, we also have stocks above the 200-day, and we actually made a higher high here. Stocks, S&P 500, stocks above their 200-day, but we're rolling over there also. Cautionary notes all through the market. Now, ES looks like we may get another squiggle higher here today, showing some strength as we get near the open. We kind of rejected going lower on Friday. We kind of tagged that low end, 1, 2, 3 down, right into the target zone. Came up just shy of the bottom of my arrow, and then we've reversed off of that, potentially going higher again. So this is an interesting kind of thing that we've set up in the market here. Like, that was a move up. This was a 3-wave retrace that held perfectly inside it. So this makes a nested kind of pattern. And I'm going to remove some fibs and clean it up a little bit. Since this all happened, we're in the past. Now, we go from this high down to this low. Came up shy, didn't make a lower low. This makes this a nested potential pattern to go higher. That target right up there, still at 52.83. Right up there. Could it happen today? Could. Could it happen tomorrow? Could. Wednesday? More than likely, we're going to see volatility. Now, if we're up there by Wednesday, watch out for a large negative reaction on FOMC. That could be the top. If we rally up into the FOMC announcement statement on Wednesday, that may be the point where we burn it down. And everybody's like, oh, I thought the Fed had good news. And then, it's like, oh, it's not baked in. We had to, whatever the excuses are. All right. I want you to be very careful. The charts are saying we're setting up for a potential pullback. Just throwing that out there. And right here, oh, look at that Google potential echo trade entry. That's more bearish. All right, this is like that's a diagonal. Oh, I don't like that. It's either a nested setup for going lower or, oh man, I don't like that at all. Now, if we break above this 618 level right up here, we got to pull this over to the lowest low. See, NASDAQ did make a lower low on Friday. Made a lower low. This sets this up negatively biased. So NASDAQ's a bit more bearish than the general S&P. We tried to break below the channel, rejected it back up, hovering kind of in this downtrend of highs so far, trying to break out right here. If we break out, retest, we could go higher from here. Could be all that. Could have been a gnarly correction, but we did it, and we could rally right back up here. Right back up here in this zone by Wednesday. That'd be a wild upside ride. Really fast. Russell, on the other hand, not really showing strength at all. I'm down in the lower time frames because stuff's kind of hard to see on these big picture time frames here. And Boeing, look at that, hitting the target. Oh, yeah. So Russell just churning still. Hadn't come down to the bottom of the channel. That could pop one more time, but it really looks... This is starting to look like gnarly price action. There's no substitution for seat time. And, gosh, it looks really bad. It can keep grinding, but when it breaks, it's going to break and be really rough, is what this looks like to me. Oil, looks like we're going to confirm the breakouts. 83, the first target. Up here at 85, next target above that. And then I just moved an alert. And 90 above that. 90. There we go. Now, my favorite way to play oil, just in case you're new here, ES was S&P 500. NQ, QQQ, that's NASDAQ, you know, ES, S&P, that's like SPY, SPX, you know, those sort of things. NQ, you know, QQQ, TQQ, SQQQ, all the QQQ, all the NASDAQ derivatives. RTY, that's IWM. CL, that's oil. You can play with UCO. You can play with USO. Any of the oil funds, you can play this. GC here. Oh, getting a little doji here. A little doji action after it tests. I'd like to see that bounce and go. Oh, look at that. Maybe I should have held that downside on Zillow. And I'm going to go bounce over there real quick. Oh, look at that. Go. Dun, 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 dun. I'm waiting for it to hit this level right down here at 44. If it can hit and hold that 44, possibly. And farthest I really want to see it's 42. If we can hit and hold that, it's going to be a super bullish, super bullish setup for going higher as soon as we break back above the roadmap line. And then BA, go visit that one real quick. Right down in the target zone. Anybody that wanted to doubt me when I said this in December, look at that, baby. We could potentially go a little bit deeper. 150, 160, probably as low as I really expected if we're going to find support and go higher. This is another epically bullish pattern for both Zillow and Boeing. Almost the same pattern. We could see a large upside potential on Boeing if we find support and turn back above the roadmap line. We could be talking about a mega upside potential. So Zillow has not as big of a potential upside, but still, that's almost a double just on shares. So that's I'd call that a pretty nice upside potential. Rolling on back to Bitcoin. Zoomer up. Lots of lines on this chart. Lots of lines. And with, you know, probably need to go to the spot market and look at this, but further downside could be down to here if we do an echo of the correction we did just, what, 2 weeks ago, week ago, right there on the 5th. That one big down day, if we do an echo of that, could take us down here to around 65. Could drop all the way to 60. That would be not out of the realm of expected at this point. Upside right now, somewhere around 76,000 and 85, 86,000, 82,000. I'd be conservative and go 82, the bottom of the oval. So that's what we have cooking on Bitcoin right now. And if we go look at the spot market and the all-time history, actually we kind of made a bottom Saturday. and we've been rallying back up. So it's a different story when you look at the futures versus the actual spot market. Why do I look at the futures? Because they're a certified price by a government entity, and otherwise there's no certified price for Bitcoin. It's all just based on whatever because it's darndest to try to average a price and create their own index across all the brokers. Now you'd be like, what do you mean brokers? Like I thought Bitcoin, go to the Bitcoin exchange and do it. Well, there's 721, I think there's actually more. Let's refresh this. 730 different crypto exchanges, and none of them are required to have the same price for any crypto at all. Like there's no unified price of any crypto at all. So when you see somebody say, oh, Bitcoin's 70,000 or Bitcoin's 68,000, it's like, what exchange are they pulling that number off of? You got to know, because it can be different. And to prove the point, we can go look in here and we can look at markets and look at the different prices as we roll down through here. And if we actually extend this, there is arbitration, but look, 68, 67, and you'll see some outliers in here as we go further down the list. There's a 70,000 right there at Binance if you trade in that pair. 67.9. So there's some arbitration potential opportunities if you had the ability to go trade between these brokers. Price does, this is a liquid asset, but if we jump on down the list a little bit, you start seeing bigger outliers. You can see some diversion away from that $68,000 price. There's a 67. 74 up there. See that? Saw it before I jumped down. It was a $74,000 price for Bitcoin up in there. So, and the further you go down the liquidity list, the more divergence you'll see in these numbers. And we can jump on down and on down and keep finding different prices for Bitcoin. There's nothing that says that there's no official price. That's, even though this price is up here, 68,404. I mean, look, none of these say 68,404. Isn't that kind of wild? And that coin is 52% of the entire crypto market right there. If you go to something else that's smaller, you get huge variability. If we go down here to Matic, possibly, I've not done this. I'm just taking a wild stab here. And the first page, we're seeing $1.05 for a lot of these, but then as we jump on down to a couple pages later, look, prices all over the place. $1.21, $1.18. That's pretty substantially different. I mean, it's not just a percent or two. So crypto stands alone. Each exchange is by itself. So when you're talking about a Bitcoin price, it may not be the same price everywhere. I just want to throw that out there. That's why you can look at the futures, and you can look at the spot market, and get totally different numbers. I tend to use the futures to do the charting because it's kind of a certified price. Where it comes from, I don't worry about it. So, it's kind of like a crypto bazaar. Like it's kind of like going to the flea market. The price over there may not be the price over there for the same product. You can shop around, and I do recommend to crypto followers that you spread your risk around. It's like FTX blew out. That was a major exchange. It's one of the top ones in the world, and it blew out. That's a whole fraud. Now, what keeps Coinbase from doing that? What keeps Crypto.com from doing that? What keeps Binance from doing that? Go down the list of exchanges. There's Binance, Coinbase, Bybit, OKX, Upbit, Kraken, KuCoin, Gate.io, HTX, Bitfinex, MEXC, BitGet. There's 730 of these. They just keep going and going and going. Like, you can go buy crypto, and not all cryptos are supported. If you go look at how many coins are supported on these markets, like people want to ask all the time. I get the question, well, where can I go to just buy anything I want to buy? That's the thing. But you can't. Like, do you see any of these that list 2 million cryptos? No. That one's pretty. 1,973 coins, 1,955 coins. The main ones up here, Coinbase, 241. Right? They don't support a whole lot of coins, really. Binance supporting almost twice as many. So crypto is one of the, like, it's difficult for a lot of people to wrap their head around when you're actually trading crypto coins. The fact that you can't just go open a crypto account and get access to everything. Like, that's the way the stock market works, but that's not the way the crypto market works at all. And it's a real mind bender for a lot of people. All right. And that's also why when we look at the spot ETFs, I suggest spreading around who the fiduciary is. Coinbase is a fiduciary for like the majority of them. Fidelity is their own fiduciary for their own coin. BlackRock iShares uses Coinbase. And then another one that gets used is down here. What number? Gemini. I always want to say it G-Mini. That one gets used by one. So, spread your risk around. Consider who the fiduciary is for the ETF if you're going to hold ETF shares. Don't just put all your money into one. Spread it around. That's the best advice I could give you if you're going to use those ETFs. Now, Bitcoin's price, we may see another dip. Entirely possible. Entirely possible. We could see a little further downside here. We're holding that 30-minute roadmap line, not busting through. We've held it and held it all the way down here. This may indicate that we're not done on the downside, despite having a little bit of rally since Saturday. All right. 60,000 still entirely possible to go flush out some weak hands. And we could flush on down further in the face of halving. Now, if you're unaware, we have a major halving event coming up. About 4,700 blocks left. You've heard about the blockchain. It's a chain of blocks of transactions. We have roughly 32 days to go. And it's happening. At block number 840,000, we're going to get a halving. Now, what does that mean? It means that miners are going to, instead of getting paid 6.25 Bitcoins for mining a block, they're going to instantly get paid when we get to block number 840,001. The reward will now be 3.125 Bitcoins. That's how many will be hitting the market every time a block's created. Block's created roughly every 10 minutes. So right there, you can see the blocks roughly 10 minutes, but right now we're running about 10.2 minutes. And there's the blocks as they happen. This is mempool.space. That's the website if you want to see it. So this is a key event. I see it a lot in the media, and I see a lot of misinformation about what's happening. And I feel like it's important to make sure I share this with everybody and get you on the right page with some actual truth about what's going on. And it's not just hype and all that stuff. So we are having a halving event. It is going to happen. And there's a lot of money tied up in this baby. So I think we're well beyond it being a Ponzi or a scam or a scheme or anything like that. There's a lot of money in here. And we're seeing a wallet that's been nicknamed Mr. 100, accumulating about 100 Bitcoins on average per day since the bottom in November 22, and has now become the 14th largest Bitcoin holder in the world, and may climb the ranks even higher. And they buy about 100 Bitcoins per day, every day, regardless of price. So I think that's kind of interesting too, that somebody out there is accumulating that much money. Like Snowden tweeted that he thinks a major government. I think this is all based on that. Could be a government, could be somebody else. It's, they've accumulated basically about $3.5 billion worth of Bitcoin between November 22, kind of low in Bitcoin, and now. That's it's not somebody like me. I'll tell you that. I don't have $3.5 billion tied up in Bitcoin. I wish, but that's not anywhere near what I've got going on. And you can see the transactions sitting out here waiting to be processed. Yesterday, interestingly enough, we only had about 700 transactions trying to be included in the block. Now here we are. We've got thousands stacked up. 3,000, 3,000, 3,000, 3,000, 3,000. So thousands of transactions stacked up. Where yesterday, when I looked at this, we didn't have much at all. And actually, the price was really cheap to transact on Bitcoin. So interesting there. All right, moving on. And XSP. Booyah, baby. Nice pop. Looks like we're going to go up for the targets. 520. Alrighty. Ethereum. Hey, Major John. Good to see you this morning. And Ethereum kind of finding some support down here. We may see further downside. I was saying last week that I thought the Ethereum chart was a little more on the bearish side than Bitcoin. Now, we may see a correction. Could be a large correction. It could feel like a pretty large correction. We could lose $1,000 on Ethereum. That could be like a third. Now, we could find support in here somewhere, but I'm just throwing that cautionary tale out there. We did stop at the 786. Almost dead cold. This whole big pullback. We popped up, hit that 786. We may find support around 34. If we don't, probably come back to the roadmap line down here around 26, 27. All right. Dollar is still hanging right in that resistance. You know, it was resistance going higher. It popped up, busted through it. Now it's resistance here. And it didn't really hold much support. You know, we supported off that zone, then busted through it, came back up into it. I'd like to see it push down one more time. We have a bearish setup, but if it potentially that was just three-wave correction down to a 618 bounce, and we could go higher. It definitely could go higher. Now, first indication we're going to actually go higher is a move up through this zone right here at the top of the box. This 104.15 area. If we get up through that, probably coming up here at least to 105.60, if not 106.50, if not up here to this 109 area. So this could be a three-wave correction, but not sure yet. And this bigger thing could be a three-wave correction, and then we go on down. This pattern didn't look very bullish as we concluded it, so it makes me curious as to what's about to unfold here. So we could see a little rally up in this zone and then roll over again. It's about having your bigger picture that you kind of stick with, and then honing down as new information is presented and trying to pick the twists and turns as you go. Remember, it's not being wrong that cost you money. Like if you thought it was going on down now, well, it's telling you that we're not going down now. So it's not being wrong that costs you money. It's staying wrong. Staying short right now in the face of evidence that we may go higher here can cost you money. Now, it can turn down and break down below. And if you set alerts here, if we break out above this, we're definitely going up. If we break down below here, we're probably going down. So that's how it kind of works. So bye, Kimberly. See you later. Talk to you later. Anyway, SMCI. Churning here at the top, not making new highs, even though it's on the biggest movers list. Up $54 today. That's about 5%. This is looking like topping. I would be very careful. Very, very careful. NVIDIA showing a little strength, but that also looking like that topping chart. Remember this chart? I keep showing it. We could be working on the top, although we could be working on this. We'd be chopping around here, and then we can do another leg. So it's like, where are we on this? In Discord, somebody quoted that they had a window salesman coming through and saw their trading chart up on the computer and said, hey, I got a tip for you. Buy NVIDIA and SMCI because they're going up. And that's comical to me when people that shouldn't know anything about the stock market are tipping you off to crazy moving stocks. Be careful. Be careful. don't usually talk about Avalanche during this show. Tomorrow night at 5 p.m., Tuesdays at 5 p.m., I take requests, and we'll cover all different things. So my crypto update, if you want to know all the more details, crypto power plays, the update is posted in the members area. Should be, well, it's posted in Discord. It should be emailed out and posted to the members area soon. AVGO starting to push the lows of the uptrend, and we're breaking low, breaking the low trend. Looks like the roadmap line may be where we're heading, despite being on the poppers list for today. FNGU. Go chart, go. There we go. Churning here under the breakdown out of the channel. Watch out for downside. Google popping on a report that we may have a deal with Apple in the works to supply AI. So if this closes here above the 618, this is a go for at least 161, if not 169 on the upside. And if we just rally on up there, I missed it. Better luck next time. Tesla pushing on lower, almost to the target land. Gosh, man, we got so close last week. 158. I'd like to see it touch there, and that may have been it. Wrongamer, if you're watching, that may have been it. We could see one more push. Could go just a little lower. Meta. Just chugging, kind of slightly upward bias, but kind of chugging the middle path at this point. 3 paths for Meta. Come on, pull over. Come on. Come on, chart. Come on. Come on, chart. There we go. Could just rally up here. Could go sideways and then rally up there. Or could go down and then rally up there. Or could go down further. So, watching for this path. There's nothing high probability at this point. It kind of did the high probability thing already. So, NVEI. God, thing being slow today. NVEI. Must be a lot of people messing with TradingView today. That's not tradable. That's just a choppy, sideways garbage of a mess. And we're sitting in a giant gap down right there. There's just nothing tradable for me right there. NVDX. That sounds dangerous. T-Rex 2x long NVIDIA daily ETF. Looks like NVIDIA's chart is just a little crazier. So be careful on leverage. That's what I would say. And be careful. QQQ. Looks like we need a retrace. Yeah, we're in this crazy channel just like the S&P. We'll break down. Watch out below. SOXX. Looks like it wants to come down. All these things. Look how similar all these charts look to this thing right here. We just haven't done this part yet. Let's find something to pull over. Drag this chart over. I mean, look right there. If you cover it up, that looks like a lot of those charts. A lot of those charts, right? A lot of these charts have that same sort of look. Can they go higher? Yeah, the top could be even higher up, but I'm just the cautionary tale. Be careful when you see it showing up. You know, stuff like this is more tradable. Nice, reliable pullback. Potential going to bust out and go even higher. I'd like to see it come back and hit a roadmap line, but it probably did on a smaller time frame, like a 30-minute. That could have been, look, nice 1, 2, 3. It's probably even proportional. 1, 2. I usually just stick to the daily. And it's very, very close to an echo. The first move, the second move down, and 105 would be the upside off of that pullback. 105, 109. QCOM. That played out and found resistance right at the watermelon seed squeeze target. So this thing did this watermelon, what I call watermelon seed squeeze, because when they do this, where they, look, lots of 3-wave moves that are in a declining squeeze. It's kind of like squeezing one of those slimy watermelon seeds, and it pops. You don't know if it's going to pop up or pop down very reliably. I mean, you can try, some people can try to shoot their watermelon seed, but it's a highly unreliable pattern. This one popped up, hit the target, which usually when it breaks out of this consolidation, it goes the distance of the mouth over here, which is what it did. You see that mouth over here? Popped up, hit the target, and now it's just kind of hovering. And we may see a retrace. Can it get continuation higher? It's possible. We have this resistance right above us to contend with if we're going to go higher. Another one that's not on the list today, but similar situation. Look at this one. Did the same squeeze pattern. It was either going to pop out or pop down. It popped out. Went just a little bit beyond the target. Now potentially going to get a retrace. So that one lasted a years long watermelon seed squeeze. And then pop. PDD potentially doing a roadmap bounce. We can break back above this zone right here. I've got my alert right there at 141. Looking for 164, 178 on the upside. And this is China stuff, so I'm very cautious. If I go into this, it will be very small risk because I get burned on. I've gotten burned on China so many freaking times. It's like a hot stove lesson. AMAT. It looks like we're going to remove the drawings. Oh my goodness. Maybe it's my browser just getting gunked up. Anyway, AMAT may pull back. CRWD. Certainly, all these are kind of looking fully cooked. Had that pullback right there, and it shot right up to the 1272. And which little squiggle is going to be the last squiggle? This is definitely looking like we could see a larger pullback down to this roadmap line target area. HCP. HashiCorp. That almost looks like a dumpster fire chart pattern, but it's got high price compared to, and actually beats on earnings, even though it loses lots of money. That's a gnarly chart pattern. That's a big downward kind of. We do this. And we're right at the resistance. We could poke just a little higher and then probably, I mean, if the past is any indication of what we're about to do, we're probably going to keep going down here. And we've got lots of resistance up there built up in these zones up here that we're going to have to get through. And done. Looks no bueno. Not good right there. AMD potentially topped out. That's that same pattern here. We could see a little volatility. Remember this same pattern right here. That big spike, the initial drop, we could see a little rally to a lower high before it drops on off. Be careful. Another one that looks a lot like this. Further along in the pattern. See that big spike? That little bit of consolidation, probably going to come back down. And that was already down on further down the list. VRT, climbing up, making that pattern. One day or another, we're going to run out of runway here on a whole bunch of these. PEP, that's under the roadmap line on the daily. That's kind of bearish until we can break above this resistance we've built up in here. GGL, that sounds like a leverage long on Google. And that's going to be the Google chart just multiplied by 1.5. Potential for that one to go even higher, 38, but leverage does not always follow the patterns. So please be careful. TSM. Goodness gracious. Looks like we could come all the way back down to the zone. All the way back down. Come on. Click. I can't even click on that. There we go. Somewhere in the zone. Looks like it's where we're going to head. BNAI. Not even enough candles to do anything with. That's just volatile crazy. If that was an IPO, it's probably going below that. EH. Man, that looks pretty gnarly. ARM we already kind of covered. That looks like, despite being on the gainers list, it looks like it's going to decline. SAIC, ouch. That's why they can come right down to the roadmap line. Now, that is a potential pattern. That's potentially all the retrace we needed. If we break back above the 135, 136 area, looks like 152, 162 on the upside. And funny enough, my family's engineering company was a spinoff from SAIC. 4. Right back down to the roadmap line. That could be, if we hold support there, that could be all the retrace we need to go higher. LOGI. Look at that craziness. If it breaks on down, makes a lower low, that would be kind of expected at this point. Find support here for Logitech and then go higher, 100, 106, or break on down and go back down, test this consolidation down here. Probably that support where we gapped up from. Riley, B. Riley, these guys buy distressed companies. And since there's more companies going bankrupt this year than we've seen in years, it sounds like they've got their pick of the litter. But they've done the upside down market roadmap pattern. The extension target down here around 247. What's interesting is the insiders for this company are buying the shares like crazy. They know something's up in these lower prices. So watch for a breakdown to 2. I mean, if you buy at 15, you hold it down to 2. That's a lot of value you just lost. So make sure you pick your spot where you're going to, if you're going to get involved. LI. Back to the roadmap line. Didn't break out. Could go lower. That lower target down here around 20. And it's just been chopping in this giant box for a good long time. Good long time. Not going anywhere. Bottom of the box back down here at 12.50. GCT. That is a gnarly looking chart. Gnarly looking chart. And watch for it to break down back to the roadmap line. That would be what I would warn there. And then BitX leveraged on Bitcoin, of course, with Bitcoin pulling back a little bit. Oops, bumped a key. With Bitcoin pulling back, this may pull on back down this 24 area. If it comes back to the roadmap line, we have the halving coming up here around April 19th. It's coming up. So, bias for the day. Bias for the day. Watch for that further pop here. Looks like we could see, we've kind of invalidated the further downside potential here. Kind of wrapped it up, and as soon as we get above this level here, looks like we're biased to going long. Right up here, 52.16 on S&P. ES has about a 50-point difference here. Potentially up here to 52.80. Looks like what we got. All right. There we go. There we go. And hope everybody has a great day. Be careful out there. I'll be in Discord if you want to come chat with me. The link is in the description. If you want to join that, make sure you subscribe. Make sure you hit the bell with the notifications so you get notified when I go long. I mean, when I go live. Excuse me, not go long. Notified when I go live. And if I said anything today, give me a like. Said anything at all that you thought was beneficial, helpful, informational, give me a like. Interact with the video. And I'll see you again tomorrow